Ladies and gentlemen, good day and welcome to Balrampur Chini Mills Limited's earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jenny Rose from CDR India. Thank you, and over to you, ma'am.
Good afternoon, everyone, and thank you for joining us on Balrampur Chini Mills Q3 and 9M FY26 results conference call. We have with us today Mr. Vivek Saraogi, Chairman and Managing Director of Balrampur Chini Mills, Ms. Avantika Saraogi, Executive Director, and Mr. Pramod Patwari, Chief Financial Officer of the company. We would like to begin the call with brief opening remarks from the management, following which we will have the forum open for the question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now like to invite Mr. Saraogi to make his opening remarks. Over to you, Mr. Saraogi.
Thank you, and good afternoon, everyone. And thank you for joining us on our Q3 9-month FY26 earnings call. I trust all of you have had the opportunity to go through the detailed presentation put out by the team, which gives our operational and financial performance. I will initiate the call with an update on the current developments in the sugar sector, followed by our company's key highlights for the period under review. India's net sugar production. So I will just put this very simply. Our estimate is that Balrampur Chini Mills' internal personal estimate, the company's estimate, is 325 lakh tons, diversion 35 lakh tons, net production of 290 lakh tons, 4 lakhs has been contracted for exports, leaving a net balance of 286. Consumption is estimated. Some people say 288, some say 290. So net, if we do not go down to nitty-gritties and of 1 or 2 lakh tons, the assumption is that there would be no addition to inventory. There will be a minor depletion to inventory. The opening inventory is at bone-thin levels, which is at 5 million tons. And this, in effect, will lead to a very strong demand situation with no inventory overhang. So therefore, the pricing seems to be moving up. Therefore, it's bullish for the prices, and the prices in the month of February for UP mills, for our factories, between 41 and 41 and a half, which we feel can inch upwards as the season progresses, as the year progresses. On the policy front, cane prices have been increased by several key producing states, adding to cost pressures for the mill. In UP, we have had a 30 rupee increase in cane price. In this scenario, a revision in MSP aligned with current cost structures becomes critical for timely payment to farmers and to maintain market stability without any fiscal burden on the government. So again, I'll give a little perspective to this. MSP might not be relevant at this point of time with the current prices of UP. However, this is a bottoming kind of a signal from the government, which will be which comes in hand when you begin the season in December, etc. And it is a signal which is much needed and much overdue. However, if, let's say, MSP came today, it would not change the pricing trajectory. Now, the real concern is about the ethanol pricing. I'll come to later. So, one concern about the potential ethanol imports from the US and maize, etc., have been eased following the recent trade agreement. However, uncertainty continues around long-term revision of domestic ethanol price. Despite an increase of 16.4% in the FRP and operating costs, ethanol prices under B-heavy and juice route have not been revised. Pramod, this is the third year. Yes. Now, this is extremely disappointing. And we are extremely surprised since this revision which was sought would have marginally or absolutely sub-marginally impacted either the OMCs, or if they decided to pass on to the consumer, it would be in the tune of 10 to 20 paisa per liter on a price of, what's the petrol price? 100 rupees? Yeah. So it's around, if the pump price for the consumer is 100 rupees, this was a 10-20% impact. So this kind of amazes us as to why this has not been done for the third year post FRP revision of 16.4%. Without this, in future, millers will have to rethink about large-scale diversion, and the E20 program, I'm not sure, but it needs more attention. It began with a lot of commitment. That commitment has been sort of reneged upon by the government midway. Against this backdrop, the company delivered a healthy operational and financial performance. Sugar segment performed well, supported by improved realization. Distillery segment delivered stable performance on the back of higher volumes. However, margins remained under pressure in the absence of ethanol price revision. Sugarcane crushing for the company for the period under review increased by 8.4% to 387.6 lakh quintals, supported by early commencement of operation and improved capacity utilization. Despite a decline in overall sugarcane acreage, company expects higher crushing levels for itself during the season under review, aided by additional area allotted by the government, and better yield owing to our working with the farmers closely. Our PLA project continues as planned. Construction activities are in full swing with more than 3,000 workers being deployed at site. Approximately 90% of the imported equipment has arrived, and the balance is on schedule and in transit. Market developments efforts have commenced through trading of imported PLA. As of 31st January, cumulative project expenditure stands at 1421 crores, funded through a combination of 790 crores via debt and balance through internal accruals. We remain committed to sustainable value creation by optimizing operations, maximizing value extraction from each unit of sugarcane. Our diversified product portfolio, including PLA's initiative, is closely aligned with emerging global sustainability trends and strengthens the long-term resilience of our business. So we continue to focus on debottlenecking, enhancing efficiency, strengthening stakeholder relationships, and we continue to be very careful and prudently look forward to deploying our capital. This brings me to the end of our discussion. I'll now hand over the floor to Avantika for giving you an update on cane and PLA. Thereafter, Pramod can take you through the financials. Thereafter, we'll do the Q&A session.
Good afternoon, everyone. Thank you for having me. So just a very quick update on both first cane and then PLA. So I just want to highlight that we are, as already highlighted within the opening remarks, but we expect a 5 to 6% increase in the crushing this year vis-a-vis last year. And I also want to share some encouraging news for the upcoming year. We expect an increase in area of about 5 to 7% in the upcoming season as well. Not only since cane prices have been increased, but we have also been allotted some new geographies. Other than this, our development activities in cane, I want to highlight one in particular. So in our insect pest disease management program, we have now focused since the last 2 years very, very heavily on mechanical control by allocating labor budgets rather than chemical budgets. Actively since the last 3 years, we have ramped this up. And this has not only increased the fertility of the soil, but increased the actual sort of resilience of the crop against these kind of insect pest diseases, whether it's top borer or whether it is red rot. We have relied less and less on chemical and more on mechanical and biocontrols, reducing the carbon footprint of sugarcane cultivation. Secondly, now I would like to move on to PLA. I want to highlight another figure which might not be so visible to investors, that the trade of PLA since the time that we have announced the project has nearly doubled if we are to take the annual import of PLA and its product. So it used to stand between 4,000 to 5,000 tons before we announced the project as neat PLA, and we expect that at least a 4 to 5 fold at a conservative level in compounds and finished goods was coming in. But now we see it at around 10,000 tons annually in the year of 2025. And again, we see a consequent 4 to 5 fold in compounds of PLA coming in. So while our trade and our sales figure might not exactly reflect the exact PLA market in India, I just wanted to highlight this to show that we have been working relentlessly and with a lot of compounders and converters and achieving not only sort of goodwill but real technical success which has never been seen before in India. As highlighted last time, we had worked on over 50 projects, out of which 20 have been closed successfully and 30 are ongoing, and we see success in them all. So the technical success is actually what I would like to highlight in the downstream technology. So that's it from me.
Thank you. Good afternoon, everyone. I would not like to repeat the financial numbers which we had already shared in the detailed presentation. I would now request the moderator to open the forum. Thank you.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from Prashant Biyani from Elara Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, regarding this ethanol pricing, if we have to look the other way, what is the incentive for the government to increase the ethanol price right now? Blending targets have been achieved and we have ample capacities also. So till the time there is sugar glut or even standalone ethanol companies are on the verge of bankruptcy, government may not increase the price at all from here. Your view on it?
So we are talking as if, government is running a business. So government is supposed to be running a system which is for the well-being of the country. And that's where this policy began. So just because you get capacity up to what you need, you don't stop increasing the price, and the commitment which was made, which was followed up to 22-23, which was if 5% was the rise in FRP, 5% was the rise in ethanol price. So, if we talk like, and if I may speak a little informally, government is not a bania. Government is supposed to, this is climate friendly, farmer friendly. So owing to this, exports were not needed, export subsidies were not needed. Owing to this, farmers were paid on time. You suddenly don't backtrack midway.
And just on the price front, they would just increase prices based on the consequent increase of sugarcane prices. They need not increase quantity of ethanol in that. So it actually has no relevance to sugar per se.
I agree with all that, but because now government is acting like a bania only, so then...
Then you're right. So that's why they've not yet increased it. So these are not moves with any kind of long-term thinking. Suddenly something has gone up, and government has been pragmatic for years, and I'm very hopeful that they would again see pragmatism down the line.
Sure. So on PLA, while we would be supplying to converters, but have we got any formal or informal assurance from any of the potential client for offtake, or either from railways or defense or temples, where we are also targeting them as a potential client for the end product?
So, I'm not at liberty to tell you as of today, but the fact that we have put the names in our investor presentation and how sort of prudent our conduct has been is indication enough. I think that, these are just some institutions and then there are lots of private and everything. There's really very, very encouraging market coming for PLA. I highlighted it in the import figures for this very reason.
So if you see inside, and I think this may be of interest to all investors and Avantika knows better. So the PMO initiative, and if, those things play out, I mean, why not?
Okay,
just in short, give the perspective.
Let me talk about the entire program of this Gutka Pan Masala packaging. So there was an article and a press release from the government which included our name and our PLA, and basically for the application of Gutka and Pan Masala packaging. So this is one of the most visible litters, causing 22% silting in drain systems in urban India. So the PMO is really taking up this in a very fast-track manner, and we have been able to get technical success, which has only before this happened in China, in terms of being able to convert the product with quality and on the existing legacy machines that exist in the country. That was the only roadblock. We have already achieved technical success. We have done prototypes and it has already gone for user and degradation testing and SOP and all of that is being done. So the government is working really, really fast and really, really cohesive on that. So, if we look at sachet usage in India, you guys will probably be better at estimating the exact figures, but it's something like in hundreds of thousands of tons. And why I'm harping on the technical efficiency is that it's extremely difficult to get the oxygen and water vapor barrier right with the, with bioplastics and biodegradable materials, which we've been able to do. This is a great thing, and the cost is also decent.
So there's a lot of promise, there is a lot of interaction, and it's not up in the air anymore.
Sure. And while we are not really impacted by it, but on the other side, is the government also trying to separately pick up the waste product or the packing material which is made out of PLA at the garbage picking front?
Do you mean waste segregation?
Right. Waste segregation.
I mean, the less we comment on waste segregation in India, the better. I don't know what to tell you more than this. It's not where it should be. And if it does happen like that, it's rather simple to separate PLA. There are n number of technologies and even mechanical properties which can be taught to the rag pickers, just as they do for other products. They can easily separate PLA.
Sure, that's it from my side. Thanks.
Thank you. The next question is from Vikram Suryavanshi from Phillip Capital. Please go ahead.
Hi, good afternoon, sir. Hope I'm audible.
Yes, thank you. All good.
Okay, so first of all, I want to acknowledge you for giving more realistic production estimates in presentation compared to what we used to get from different sources. For initial, if you look at our initial estimate as a country and now the significant downward revision which was expected, how was coming from UP and Maharashtra, if you can give some broad sense?
Pramod?
So UP production, we are looking at maximum of 10 billion at a gross level. And Maharashtra, Karnataka, maybe 17.5 to 18 million. Maharashtra, Karnataka put
10, 18, 28, and the rest of India 47.
45.
325 people.
Yeah.
Okay, got it.
That's the breakup.
And second, you highlighted about increased cane allocation by 5 to 7%. So does that additional land what you have got already has a significant amount of cane, or there is a further scope to improve further cane development going forward there, so we can see, apart from the area, cane availability can also improve significantly?
Yeah. No.
Good point.
Good question, actually. I just want to clarify, it's not 5 to 7% increase in allotment. It's 5 to 7% increase in crushing, 5 to 6% increase in crushing that we expect. This is not only through external areas, but internal development and yields and everything. Now, moving to the second part of the question, yes, definitely the new areas which we have got already have cane, but they have a large opportunity to increase cane as well. And these are farmers who have not been paid properly. So they are very, very happy and very, very excited to actually see the color of money and work with us and increase cane area. We are very, very hopeful.
Increase cane area, improve variety, everything.
Got it. And in terms of yield improvement, we have seen improvement, but probably I was expecting significant improvement further from here. So was that improvement mainly because of weather-related and recovery from the disease, or we can expect some structural yield improvement with varietal difference going forward also in terms of recovery as well as yield, if you can comment?
So I just want to highlight that we've been working very hard on variety since red rot hit. So while the red rot variety is reduced to low single digits, we see an increase, like 14201 is an established variety now. This year we are already going to crush around 16% of it, and we see a significant increase in the coming year. Similar to this, we have 2 more varieties in the pipeline which have good potential for yield as well as recovery. So this is something that we are working on. Plus, we have a 4 to 5 year plan and 4 other pipeline varieties which will then come in. So this is a very strong program with the tissue culture and everything that we have established. So we always try for structural change so that we do not need to rely as much on outside factors.
Got it. And last question, I think sir also talked about on ethanol views and all that, but just for clarity, if you look at situation remain and with sugar prices currently what we have, can we go for maximize sugar and then use the distillery capacity more for grain-based ethanol as a structural change going forward, or we still hope that the government will consider the revision in ethanol prices so we can stick with the existing models?
So what we have done, pursuant to the fact that government did not increase price, we have already diverted many of our units to, C-heavy. Grain is not possible in these units because grain is a separate line of machinery which is only available in Mirzapur. So we have taken those decisions internally to maximize sugar production.
Okay, got it. So I was just thinking can we also go for multi-feed in other places also?
No, that's not what we are planning.
Okay, got it. Thank you, sir.
Thank you. The next question is from Sanjay Manyal from DAM Capital. Please go ahead.
Yeah, I think my questions are pretty similar to what the previous participant has mentioned. So it is about the recovery specifically. I think initially we were talking about 50-60 probably basis point recovery improvement in Western UP and probably 20 to 30 basis point recovery improvement in Eastern UP. But I think it's fizzled out. Is it because of the ratoon crop, or we may think we may get better in plant, or you think that recoveries will be flattish kind of for the season?
Good question, Sanjay. So you're right. West, I don't know, even that's not as nearly as high as what you're saying. Lot from West is higher by half, and lot of West is lower than last year. So West is also divided into parts. Having said that, we began with an improvement of 0.3 kind of expectation. For 1.5 months, we got no sunlight. So beginning as of yesterday, bright sunshine has started again. So maybe we have lost some time which we did not anticipate. So 0.2, 0.3 may not be possible. 0.1, 0.15 may be possible.
Okay. And second, about the fungibility part only, it seems that Mirzapur, I think initially when we did the capex for Mirzapur for 320 KLPD, it was assumed that in a certain situation like today, when the maize or the grain ethanol prices are higher, probably we'll utilize this Mirzapur facility for a higher grain ethanol. But it seems that it will be less than 5 crore only. It seems to be that way only. What's your view on that, and why we have not been able to scale that up to 8-10 crore liters probably?
So Sanjay, please understand, we have a capacity of 5 crore liters of maize for the balance amount of season after sugar season shuts down, right? Balance period. let me get it very clear. Government has accepted only 60% of the tenders put out for maize.
Okay.
And you cannot put out a tender, then what you have, then your capacity. So we tendered for 5 crores, we got 3.12 or something. 3.15 crores.
You also divided between rice and maize in the ratio of 60.
तो पूरा grain को दिए फिर divide किए. So government is not inherently very much in favor of that segment. So if you wanted to increase maize, you'd put in a capex, let's say for another distillery of 10 crores, you would only be able to sell 6 crores. Balance, the distillery would be idle. Am I clear? Right?
Yeah, but my question over...
bolo.
Yeah, so sorry,
yes.
Yeah, my question over here is that why we couldn't bid more than 5 crores, because if I'm not wrong, the entire Mezapur facility is fungible towards grain. So maybe I can do a C heavy, means ethanol to C heavy or B heavy.
Right. So that was possible, but at that point of time, one did not know that they are not going to increase the price. Having begun and tendered, it's not possible to roll back.
Right.
And in the overall scheme, until you reduce sugar, you don't get a good price for sugar. Yes. I mean, if I knew on day one that they are not going to increase any price, maybe we would have done lesser juice.
Right. Understood.
But Sanjay, the capacity would have been idle, huh? BC you would have done, but that grain would have gone for unutilized. Yeah, or 60% utilized. But yes, your question is valid. If we knew this on day one, we would have not done full use.
Right. Understood. And sir, lastly, on PLA front, I think you have mentioned that you already started trading PLA, and so is it that to build the market as of now, we have to significantly reduce the price or sort of come up with the lower price to the clients?
No. This is not the case.
Market,
we are wanting to do this so that we can get the technical feedback required for our own production, and also start creating a name in the market, meeting the right customers and everything. So customers are largely still importing on their own and just buying a small percentage from us and giving us feedback, which is very valuable for when we start production.
Okay. So these are only pilot works which is happening as of now.
No, we are doing commercial sale also, but to a small percentage in order to get feedback on quality.
Okay, understood. Thanks. That's it from me.
Thank you. The next question is from Tanuj Nagalia from SKP Securities. Please go ahead.
Hello everyone, good afternoon. So sir, I wanted to know whether there is any change in the ethanol mix. As you said, you will be making more of C heavy. So the previous mix you had said it was 25% C, 65% B and 10% syrup.
It's a very marginal tweak because midway.
Largely it will remain in that range.
Yeah, so just 1 unit midway we are shifting, which may not, because we have a 10-unit company, may not look very visible, but yes, whatever we can salvage, we are salvaging.
Okay, sir. Thank you, sir. My next question will be, sir, are we on track to close the financial year 26 with ethanol sale of 28 crore DL?
Looks like between 26 to 27 crores.
26 to 27. Okay. And so one last question, like, what kind of revenue are we expecting in PLA from the Pan Parag sachets which you were talking about right now?
This is too early in the day.
Patience.
Yeah.
So what we are wanting to say, let's understand what we are wanting to say without over expecting or under delivering. So today this is something new for us. We are going in. There are 2 parts to this. 1, to make the quality, that is the function at the plant level. 2 is to sell this. That is what your Pan Parag, etc. is. So we're separately working on these 2. And with the interactions we are having around, we feel very, very confident and happy that, we should see success on both the fronts. The detail of how we are hoping to be successful is all what we have spoken about.
Okay, got it, sir. Sir, just I can squeeze one last question. What is the cost of production of the sugar in Q4?
Q3.
नहीं आगे का पूछा
आगे का like
Yeah.
the coming.
So for the full year, we are expecting in the region of around 37.5.
37.5. Okay, sir. Thank you so much. That's from my end.
Thank you. The next question is from Hitesh Sharma from Goldman Sachs. Please go ahead.
Good afternoon, everyone.
Good afternoon.
I just want to check up on this PLA, how much is the capacity utilization right now, and what sort of, at the full capacity, will add to the profit?
Hi. So, we are commissioning in October of 2026. So, right now, there's, of course, no capacity utilization.
Plant has not come up, yeah.
And then, if on full capacity utilization, the revenue potential is 2,000 crore at peak. And we have given guidance before of a 35% EBITDA profit margin.
Thank you very much.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Dhvanit from Savla Family Office. Please go ahead.
Hi, sir. I think so most of my questions have been previously answered. Just wanted to know on the ethanol bit. Have we know what kind of pricing are they going to go on the C-heavy route for this current sugar season? Because in case this is so they have given an increase last year also. So if they give an increase right now, then the price differential between the B-heavy route and the C-heavy route is very minimal. So in that case, it looks ominous that they might actually increase the price high on the B-heavy route, right? At least, or in line with that on the cane juice route. So that what my second question is, what is our current conversation with regards to the government on this particular aspect? Are they still in talks with the government for the price revision, or have the talks stalled for now?
So, I think what you're meaning is whether there will be a revision for CAV. So, currently the indications are there is no revision on the anvil. So, we have pitched and pitched. No reply is the message we have. I cannot, again, there's government, which gives a feeling that they might not be looking at it. That is the indication.
Okay.
All products hence will remain the same. CV juice. So,
as per the November 24, October 25 season price.
Right.
Okay. Thank you.
Thank you very much. That was the last question in queue.
Okay. I'll just, sorry, sir. Can I give some closing remarks?
Absolutely, yes, sir.
Yeah. So our hope, not more than hope, we are hoping to crush over 10.5 crore quintals this year, which is about 10.55 actually, which is about 60 lakh increase over last year. Yeah, about a 58-60 lakh quintal increase, which amounts to about almost 6%. Our ability with the capex already done is to very easily handle 1.5 crore quintals. And we hope to achieve that very soon, is the wish list. But it's not a dream. We are working towards that and feel very positively inclined to achieving that. My hope is maybe part of that vision gets completed next year itself. And in Maharashtra and UP, you would start see closures by February end. So that is why the price is where it is. And even the monsoon prediction which we have read about till now is not great. So one thing is structural kind of a tailwind to sugar prices as we proceed. So yes, one sector ditch, ethanol, the other looks good, and especially for Balrampur. Right? Thank you.
Thank you very much. On behalf of Balrampur Chini Mills, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.